Hey, what's up traders? Welcome to another brand new video where I'm going to be doing a review of the previous week and showing you the good, the bad and the ugly of this week. Sorry, I have a little bad voice today, but you know I have to remove content for you guys. So let's get right into the charts. So in front of the charts, us here right now is NAS 100, and just like I've always been saying in all of these videos, the first thing we need to do is we define the range in which we are going to be trading, and that is going to be from 8:30 to 11 New York Standard Time. And after defining our range, we start looking for previous highs or previous low, that is before 8:30, that we are expecting price to trade above. And immediately price does that, the next thing we do is we drop down to the 1 minute time frame where we start looking for our setup. Now in the 1 minute time frame, what are we looking for? We are looking for our setup, and our setup consists of, that is for a bullish setup, we want to see two bearish candles before that bullish momentum, and after a very good momentum, we want to see a fair value gap that is formed. And after that fair value gap, that is where we are going to be taking our trade. So for those who don't know, or just for a little reminder, we would love to see two bearish candles. And what is a fair value gap? A fair value gap is when we have three consecutive candles, of which candle 1, the high of candle 1, does not meet the low of candle 3. So in this scenario, you can see here the high of this candle 1 does not meet the low of that, forming that gap. The gap is what we call a fair value gap. Right now, we are going to start looking for a setup that meets all our rules. Okay, looking at the charts right now, I want to believe somebody will be like, okay, these are two bearish candles before this move, and we'll be expecting price to come lower before we take our entry. Now, the reason why I'm not going to want to take this kind of a trade, irrespective of the fact that it has actually met all our rules, because you see it has taken out this high, two bearish candles before the move, it has formed a fair value gap. It actually formed two fair value gaps because there's a smaller one here. The reason why I don't want to take this trade is because this is not an impulsive move. You can see the strength, there's no strength in the candles. So with that, I will not want to take this as a trade. We can see that that trade actually worked out, but I stick to my rules and I don't want to take it because it was not impulsive enough. There we go. Now you can see what I'm talking about. You see the difference between these three tiny candles and these candles here, right? This is what we are looking for. This is a real impulsive move. And as you can see, it's actually forming just the way I want it to form. You see two bearish candles before the impulsive move. And as you can see, it took out these highs. So now, another thing which I've not been saying in the previous videos, which I'm going to tell you right now, is whenever an impulsive move forms, and we have a fair value gap, that is for a bullish setup, I want candle 2 and candle 3 to be bullish. Then, if it's for a bearish setup, I want candle 2 and 3 to be bearish. So as you can see here, I don't care about the way candle 1 forms, but candle 2 and candle 3 has to be bullish for me to validate this fair value gap. So let's see if price forms another fair value gap. Okay, now you can see price has formed another fair value gap, right? So with this at hand, you see for the first fair value gap, candle 2 and candle 3 are bullish. And for the second fair value gap, candle 2 and candle 3 as well are bullish. So with this right now, the next thing we do is we draw our fib, right? You remember, we start from the first candle of the first fair value gap right up to the high of that other fair value gap. You see now, this is the high and this is our range. So now what do we look for? I always say we always start from the 0.5 level of the fib. Why do I start looking for at the 0.5 level from the fib going downwards? Because this is our premium zone. This is the zone where we want to take a trade so as to have at least a 1:2 setup. Because if we take our trade from up here, you see our risk to reward is not going to be very good, and we'll have a very large stop loss. And below this 0.5 level, you can see that we have this fair value gap here. So that is where I'm going to be placing my trade. With this now, the only thing left is for us to look at how our trade is going to play out. You remember I told you in the previous lesson, the moment price takes out this high right here, which is like the 0 level of our fib, we break even. Let's go. So as you can see, price has gone all the way to our take profit, and as you can see, this setup was very, very nice. So this is what formed on the 25th of October. That was on a Tuesday. Now let's get to the bad. So I've done just the same like I did on the previous example. I defined my range, I wait for price to broke, and I've dropped now down to the 1 minute time frame where I'm going to be looking for my setup. Do you see the problem with this setup? You can see the setup, there was no two bullish candles before the setup, and as well, just like what I explained on the previous one, we want to see that the second candle and the third candle of the fair value gap to be bearish and not bullish. Do you now see why we don't want that to happen? This is another very important trick that I want you guys to include in your trading, or maybe go and backtest it to see how good it plays out for you. But whenever a fair value gap forms for me, I do want to see that candle 2 and candle 3. So if it's for a sell setup, they should be bearish, and if it's for a buy setup, they should be bullish. You can as well see that there's also a problem here, right? You can see no two bearish candles before the move. Candle 3 is not bullish like candle 2. Okay, you can as well see here, very nice bullish impulsive move, right? Two bearish candles before the zone, took out a high, but candle 3 is not bullish like candle 2. Even though this fair value gap was formed, it's not going to be a fair value gap I want to take. So now, do you see actually why this is something that I don't want to take? You remember when I was showing you the first setup, you remember how prices came in and flew out of the zone immediately. But you see, since it did not form the way we are expecting it to form, you can see price came into the zone, but as you can see, price has been playing around the zone. With this happening, you can see that it's literally going to be playing with your psychology. Try to backtest this thing I've just told you right now to see how good it plays out for you. Now, this looks a little bit more impulsive to me. And as you can see, at least two bearish candles, right? We have actually had 3, that is fine. We have a good impulsive move that if we measure it, it's above 25 points. Then it took out these almost equal highs. With this, you can see we can define our fair value gaps, right? There's this higher fair value gap and there is this lower fair value gap right here. They look very, very nice. Now, after doing that, after defining our zone, the next thing we do is to draw a fib from the low to that high that was formed. When that happens, what do? We start looking from the 0.5 level of the Fibonacci. That is where we are going to place our trade, because as you can see, the 0.5 level of the Fibonacci actually is within the higher fair value gap. So when that happens, we'll place our trade there, our stop loss, then our take profit is going to be negative 0.5 level. Now we have placed our trade. Let's wait to see how price is going to play out. We have been tagged in. Oh, that's a very nice doji candle. Oops, we got stopped out. So that is why this is the bad. So you can see price actually formed a very good setup. But what happened at the end of the day, we actually got stopped out of the trade. And if we can continue playing to see what actually price did after that. Oh, there we go. Price actually did what we wanted it to do. So it actually went now to the point where we should have been putting our break-even stop. So you can see there are days in the market that you're going to have setups like this. And as you can see as well here, price is actually forming a very good setup as well that we can actually look forward to take. Okay, now there are 2 fair value gaps that are following our rules. One down here and the second one up here. Now with this, if we draw our fib as well from the bottom to the top, so you see we will expect price to come down to this first zone before we will be taking our trade. So let's wait to see if price is going to do that. The moment price actually takes out this high, then this zone is no longer valid for me, because price has already gone to the place where we were supposed to be taking our break even. After filling the second fair value gap, it did not come back to the first one. With this, that is not going to be a trade. So you can see there are going to be days where price is going to do this. And also I actually looked at S&P 500 and realized that this zone on S&P actually played out. So there are days that things are going to happen like this. Now let's move to the ugly. Our high has been taken out, so let's drop down to the 1 minute to look for a trade setup. You can see there was kind of a good impulsive move here, right? But it did not follow one of our rules. So you see at least 2 bullish candles, nice impulsive move, but you can see candle 2 was bearish, but candle 3 was not bearish before forming this fair value gap. So this is not going to be one we're going to want to trade. And as you can see, if that was a trade that we actually took, you see we should have been stopped out. So go back test. Very nice impulsive move that was from at least 2 bearish candles. Before the impulsive move, it took out several highs, but it did not follow one of our rules. The second candle has to be bullish and the third candle has to be bullish as well when forming the fair value gap. So that rule was not met. And as you can see, what did price do? Price came out and would have taken us out if we had put our stop loss down here. On the flip side, what can we see? We can actually see that price formed at least 2 bullish candles before the good impulsive move that took out this low, and it formed a nice fair value gap at the top here, which we are going to draw it out. You can see it right there. So with this now, what are we going to do? We are going to use our fib as we always do, from this high to the low that was formed down here. Then as you can see, we always want to start looking at the 0.5 level. If the 0.5 level is not within the fair value gap, then we look for the fair value gap, and that is where we are going to take our entry, because we don't just want to take our entry just hanging, right? Now we have placed our trades. Let's wait to see what price is going to do. As you can see at this point, price actually, this was the low we're looking at, right? Price has actually overextended. With this right now, you see that we will probably have to draw the fib once more all the way to the bottom. And as you can see, price is going to be too far away from our zone looking at this moment. So with this happening, this zone already for me has already lost its value, because when price drops like this, I want it to come back immediately before price making such moves out of the zone. So with this zone already for me has already been invalidated. Now I'm going to be looking for another setup. Price actually never came back to the zone. Price kept on going lower, and it looks like price is actually forming another nice fair value gap here. Price has formed 2 bullish candles before this nice bearish move, and it has formed a fair value gap. Nice. Now with this fair value gap right here, we use our fib, right? Draw it from the top to the bottom, and then we'll be looking forward to price coming back here, where we are going to place our trade at the top of this fair value gap. Price just kept on extending. Now when price keeps on extending like this, and you see, what I want to see at least is if price forms like 3 fair value gaps, that's fine, but when price goes up to 4, that does not look good for me. So with this is going to be the second trade that we are going to be canceling, because price has actually overextended, just like price overextended for the first one. There we go. We can see at least 2 bearish candles. There was a high right here that was taken out by this high. Then you can see this is a very good impulsive move that we are looking for. Hopefully this one takes us in. Now what do we see? We see that there was this fair value gap right here, the second fair value gap that was formed, and price actually got into that second fair value gap and went up above our 0 level of the zone, which at this point we're supposed to be breaking even. So when this happens, this other zone that has been formed has actually been invalidated as well, because price has already filled in the second fair value gap. And you remember I said, when price has already filled the second fair value gap and it has already gone, that is already it, because price might not come back to the first one. And at this point, if price is even coming back, it might actually not obey this zone anymore. So now we are going to have to cancel the trade again. Now I want to believe at this point you are realizing why I was saying that this is the ugly setup actually of the week, because with this happening, you see we have had 3 different setups that have formed in the market, and price just kept on going and overextending and not coming back to our zone. And as you can see, actually at this moment it seems like there's another setup, right? So let's see if price is going to follow this one. If price does not follow this one, then that is going to be it for us. Very nice impulsive move, very massive fair value gap here, at least 2 bearish candles that took out this high, and good impulsive move. So with this, we head over to our Fibonacci from the low to the high, and you can see this is our 0.5 level. It's within this fair value gap, so we are going to place our trade exactly at that 0.5 level. Now we are going to just hope and pray that price actually gets back to our zone. If not, there is no trade for us. As you can see, price has done exactly the same thing like it did previously. Price just kept on overextending. With this now, this is the fourth setup that we were expecting price to come to, but what did price do? Price just decided to continue going higher. So this was the ugliest day actually of the week, and this was on Thursday, the 27th of October. So this is something you should be expecting. This is the reason why I was making this video, because you're not always going to get good setups within the week. You're going to get the good, you're going to get the bad setups that are going to stop you out, and you're going to get these ugly kind of setups where price is going to form a good setup for you that follows and matches your rules, but price is just going to keep on overextending and not coming back to your zone. And as you can see, if we allow our trades maybe in this zone, you can see price, if we had allowed our sell here, right, price would have come and taken us out. And we might see that maybe if we had allowed our buy here or allowed our buy here, price might just decide to go up and come down and take us out. I hope this video was very informative to you, and I'm still very sorry for my bad voice, but I had to make content for you. With all that said, catch you guys in the next one.